Ladies and gentlemen of the crypto space, we're live on a Monday, October 27th at 4:44 p.m. A little late in the day, but we'll get some content out as the market looks a-okay to me. This is a sexy looking market, in my opinion, with a long-term resistance flip support for the entirety of 2025 thus far. It's a statement I've been saying repeatedly for quite some time, at least the past week with this, or the past 2 weeks with these two most recent candle body closes. You can't miss them right on the chart right here, which are squarely above the 108,343 line, which was set back here in December of 2024. This chart is stunning in so many regards, as a clear, unambiguous expression of resistance flip support thus far. Now, clearly, we can have future candles, and candles matter, that change our interpretation or change what we see in the chart as for what it's telling us. But as of thus far, this is non-contentious presentation. It is a very consistent. There's no outliers. There's a straightforward interaction with this 108,343 line. So that is very comforting in so many regards because, as folks know, the way we talk on this stream has nothing to do with directionality, has nothing to do with, oh, the price isn't going up yet, or, oh, the price is crashing. Well, and we sure as hell don't talk about stupid meme coins that sure as hell know how to take all the money from inexperienced players. We want a steady and calm market to churn because we've accumulated assets over the years, and these assets pay us week in, week out. So what we look for is a Wednesday and Thursday, which gets us paid. So we want a healthy, stable market with volatility towards the upside over time, which is growth, which is constant capital inflows into this emerging market of emerging markets, steady growth over time. So in that regard, this looks great. We have a year of consolidation. That's what 2025 is. That's frankly what 2024 was also. 2024 was a year of basically consolidation around 65,705 line. Decent line right down the pipe, right down the midsection of the price action for the entire year. So we got these two really great levels. And if we were there in 65,000 for 2024, and now we're at 108,343 for 2025, this is a glorious chart. This is a sexy looking chart. What's the next level? I sure as hell want to find out. Gold sure as heck looks like it is doing some sort of local top action. Maybe a mean regression to a moving average. We got the 10 SMA on the weekly down here at 3,800, 39.87, broke below 4,000. Clearly, 4,000 is a very meaningful psychological level. Sure as hell going to freak out all the people that were lining the streets of Walmart's and Costco's looking to buy gold at $4,400. Absolutely insane what people did. Exuberance around physical gold. Oh my goodness. Who would have thunk that's where we're at with this economic reality? People are trying to figure out what to do, and they do the same thing in any market. It doesn't matter what market it is. There will be exuberance and people act irrationally. They have no idea what they're doing and they buy the right thing at the completely wrong time. Gold is the right thing to own. You just don't want to buy it when everyone else is buying it. You don't want to do what everyone else is doing. If everyone's fucking up their lives with credit cards, is it a smart thing to go out and use credit cards and fuck up your life also? No. Maybe it's the right thing to do to not fuck things up and to do things a little bit different, to be smart about finances, to be smart about capital management. Don't do what everyone else does is probably the best thing to say if you want to actually be successful, because we all know most people just fuck it up. So if you look at the price of Bitcoin denominated in gold, clearly with minus 3% on the day for gold, you have a very nice price action in Bitcoin terms. BTC, USD, you could go like, you could go like this, divided by gold. And we're looking for a bottom, obviously. So this is the point, and that's what's most exciting about where we are in terms of precious metals pricing, gold pricing. We're at the bottom. Folks are like, is this the top? It's the last thing people should be thinking about. Capital flows from sector to sector. So we literally just had an irrational exuberance in the gold market. Where's that capital going to flow when all the people that bought GLD on the stock market are like, oh my God, it's big gold's crashing to 3,900, 3,800, 3,700. Oh, I got to get out. I got to rotate to something else that's going up. Where's all that capital rotate to? Because it's going to rotate from that people panic when the price goes down because they bought at the absolute worst time possible at the worst price possible. So they're going to sell, lock in those losses, and rotate to something else, try and get a number that goes up. And again, they're going to fuck things up and buy at the worst time possible because that's what everyone does. And that's where we are because Bitcoin is going to go up and they're going to be late to sell gold. They're going to be late to buy Bitcoin. And that's just the way it is. So I would say Bitcoin is not near a top. Bitcoin is at a bottom, a local bottom in gold terms. I look forward to seeing Bitcoin up here at 40, priced in gold. Then things are going to start to get interesting because you don't have a blow off top. You don't have irrational exuberance in the crypto markets until Bitcoin has a blow off top versus gold. Come on. That's basically what you had here back in 2021 with your double top in priced in gold. So basically in gold terms, we haven't broken out yet. So we could draw a line here. I should probably save this as a decent chart to have. If you draw a line, let's say right there. Okay, nice fat line. Got some wicks through it. Looks nice. Rejection, rejection, rejection. I'll draw some circles because you guys like circles. Everyone likes circles. We're not going to draw a red circle. We're going to draw a green circle. Let's go like this. Boop, boop. Rejection, 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 rejection. So guess what? You know what comes next, guys. You guys know this by now. You take the brush, you go like this. You need the breakout, the retest, and then the higher high. And there's your trifecta of bullish confluence. And what we're looking for is something like this. There. It's no longer a green circle, but it's a perpy cirky. We need our first perpy circuit, ladies and gentlemen. We need resistance to flip support priced in gold terms. And I would say, then we finally have the Bitcoin breakout that we've been waiting for since 2021. There has been no bull market since 2021, especially priced in gold. Fathom that, process that. Now, bear in mind, the bull market may last 6 months, may last 3 months. It may get weird in 2026 until something blows up in the middle of 2026. Who knows? But the point is, there's no bull market until you see relative outperformance, especially in terms of hard money, gold. No bull market, period. Dare we do a measured move from bottom to top? Oh my goodness. Eight, I don't know. That'd be just monumental price action for Bitcoin. That'd be enormous. And also potentially enormous depreciation for gold, just cyclically, cyclical gold depreciation. Doesn't mean don't own gold. It means sure don't buy things at the wrong frickin' time. Don't buy things when some dumbass on Instagram says it's the time to buy something. You gotta buy things continuously. That's the dollar cost averaging process, especially over a 10-year period. And you accumulate more assets over time. Be smart. Don't be like most people, because we all know that most people are stupid. Not a bad thing. And I don't mean to be condescending. And I mean to encourage people to be different because we know most people fail. So, how do you not fail? Don't do what most people do, do something different. That's the core of my entire story for all these years. Something radically different. It's not about price action, it's about stability. and accumulating more assets over time and assets that pay you. It's a dividend investor mindset applied to the most radical and volatile space in all of human history, these crypto markets. Go figure. Although it's quite satisfying to do something different. All right, Aerodrome, Velodrome coming out with their launch pads. I very much like that technology. See if I could use it. That's another story. But I think this Wednesday is going to be very interesting for Aerodrome. We have another launch. Um, see what Velodrome gets any use with the tech. So, from an optimistic super chain perspective, I don't think the news is really with Velodrome. I think the news should be with Fraxnet. This is really cool. 20 chains. It's pretty interesting. And plus, you could fund it from. I mean, these are all obviously optimistic super chains and mainnet, which is really cool, and Arbitrum. So this isn't, excuse me, just optimistic super chains as well as Say and US and Solana. Very interesting. But you could mint FRX USD from all of those chains to a laundry list of chains, including Sonic. That's cool. Wow, Polygon. Talk about everything. This is very interesting and constructive. And then you go over to home. Where was it? Yeah, manage, and you could enroll an address, and you enroll the address to get rewards, FRX USD rewards, and these are rewards from the Frax custodian, which is what 4.5%. And you can click on Frax's website to see what those interest rates are. Like SFrax. I don't know. I don't know if it. Oh, here. Um, where's those interest rates? Pretty sure it's the rate of well, it's not the rate of return because not everyone stakes. So I think it's SFrax. If we get the lowest, probably 4.5%. I don't know. Yeah, 4.8%. There you go. That's cool. I'm cool with that. I'm very cool with what Frax is doing. So I think from an optimistic super chain perspective, that's probably the most interesting that's going on right about now. Other than just, in my opinion, Velodrome just being a lovely protocol that pays week in, week out, and I have nothing to complain about um, its performance, its functionality, and certainly its technology. Its price point is absolutely a nuclear disaster. There's absolutely no indication of bottom other than what a triple, couple of wicks on the weekly. And it's not a very comforting indication of bottom at all. Structurally, there is no structure here, just nuclear wasteland, post apocalyptic Mad Max, Thunderdome type stuff. Um, but that's separate and apart from it sure as hell pays very nicely weekly. What's the right home about? Autopilot has Velodrome integration. I think it's about time. And I'm very excited about this. And I am 2 inches from adding my deposit. I don't think I'm going to hesitate. I think I'm going to go for autopilot Velodrome management, albeit I have, actually, I'm not. I'm not. Because I have months. I literally have months. Who's on? Arrow's on. I got months of unclaimed Velodrome just sitting here. It's just a decent sized stack of basically USDC, Ethereum, not really incentives like OP. There's probably some KBTC, like $1,000 there. There's some more here. Like, it's just a whole stack of stuff. This is like 2+ months worth of stuff just sitting here. So I would obviously I'd want to claim that and manage that prior to depositing to Aerodrome. So I'm not going to necessarily do that right now. I'm probably just going to continue to use Velodrome and do exactly what I've been doing, accumulating Bitcoin and Ethereum and sell as the market starts to get ripe for the fruit metaphor, if you get where I'm going with that. If we go back to the data, curve 56 cents, looks good from a technical standpoint. Clearly, that what we experienced 3 weeks ago, that was an aberration of outrageous proportions. We're sitting on basically the 100 SMA on the weekly, and that's constructive to say the least. I mean, the moving average isn't necessarily the technical indicator to write home about. 100 SMA is not the weakest of indicators. I would rather see something more constructive from a structure standpoint, from a level standpoint. It's not the weakest of levels. I mean, you can do somewhat. I mean, there's a somewhat of a level here. 39 cents support, breakdown, support. So this isn't too bad, and clearly this wick held as support to a degree, but there's nothing really up here. Maybe a little bit you get some wick action, but here there was support back here at 49 cents. This is just a region of all this congestion. This is why on the weekly chart it's kind of noisy. So really the way I look at it is basically all of this. That's just this giant zone of congestion between, let's say, 38 cents and right about there, about a dollar. 82 cents to a dollar. It's just giant zone of congestion that what's that? Consolidation, churn, uh, change of ownership. People have sold and capitulated, and it's all been bought. That's the beauty of this kind of bottoming process. Everything that's been sold has been bought, and it isn't lower. The protocol is stable. It exists. It's not like you're down at 20, 10, it's 5, not negative, but not continuously bleeding out. It's that's the consolidation period that folks often talk about. And this is a massive monumental consolidation period from June of 2022 to basically present. So if anything, I very much like this chart. And if you zoom in a bit, you can see we've held as resistance the 200 SMA in the weekly twice, 1, 2. Currently holding the 100 SMA as support for 1, 2 times, dating back to June of this year. Lost it briefly at the beginning of the year, but it looks like we're above. It looks like we're getting pinched between the 100 and the 200. So a moving average compression is a bit constructive. It's on the weekend because we're at the support end rather than the resistance end. But once we get above that 200, the tone, the sentiment, the feeling, everyone will start to feel a little bit of relief that we're on the other side of the equation for the first time in forever. I believe that would be a reasonably true statement. And there we see a 50 SMA, 200 SMA bullish cross, a weekly golden cross. That would be pretty cool. Your 50 SMA is over here, and this dark green line, a little bit thicker than the darker thin green line. And once you get that cross, maybe right around here, give or take, I don't know. If you extrapolate, oh man, that's gonna look pretty. That'd be volatile because that 200 SMA is basically down and to the right, but it'll slowly bottom over the next couple of months, in my opinion, and it just makes good, reasonable sense. Anything else in here to write home about? Spelled hovering down at 34. Looks like next week on boat rentals, we'll be tempted for yield basis. I think that's what I'm going to go for as well. 1, 2, 3. Select current votes. I'll swap this out. 34. 33, 33. Looks like that's what I'll go for. Accumulate some YB. All right. That's not something to sell. That's something just to accumulate. Is what it is. It's not the highest payout. But the market isn't in forthcoming payout mode. It's in, all right, we're going to still get paid. We're still in austerity mode in many regards. We're not in the market's freely giving you boatloads of cash flow mode yet. So not yet. All right. Autopilot, vote market, everything looks good. Yield basis is throwing around some YB on staked out, Vodium, and vote market. This should this looks very nice. All the metrics I'm seeing out of yield basis. Some nice votes. I look forward to that 1 billion credit line vote. They need to get some more flows and depth to the curve CRVUSD LPs. And the peg keepers need to expand. I don't know if that vote completed yet or it completes this Wednesday. We can take a peek real quick. Dow proposals. Here, peg keeper capacity. 1 day. No, it completes this Wednesday. So once this peg keeper capacity increases and they do have the incentives going to the LPs, I guess we'll eventually, or rather sooner than later, most likely, not discuss, we go to govern. We'll see the expansion. We'll see the proposal to expand it to a $1 billion credit line. I guess that needs to go through CurveDAO also. So that's probably a week or two away, getting their ducks in a row first. But this looks pretty cool. I've been tempted to swap over to tokens to get 22.9%, but I'm like, fuck it. I don't have the strongest urge to make quick shoot from the hip decisions. I have retained the trading vault, which is a minority position. Go figure, the contrarian. The captain remains the contrarian. $9.21 million remaining in the trading vault, while the vast majority are in the token vault. Can convert at any time. It's a nice feature they added. You could convert from a trading vault to the token vault. Now, obviously, they call it yield bearing vault, which is the trading vault, and the stake vault, which is the token vault, and that is not confusing at all. It'd be a nice if they correlated token vault and trading vault. I think that would make a little bit more sense, but that's obviously what's going on here. We have a capacity to convert both ways. I have no rewards because I'm not in the stake vault, in the year bearing vault. I could easily see that I have about 0.3% return thus far. That has been like that for some time, so I don't know how often this number updates, but it's above where I deposited, so I definitely like to see that, and I like what I see. I look forward to seeing some numbers. Michael obviously mentioned that the trading numbers, he wanted to smooth that out. So cool. When I hear things like that, making modifications to smooth things out, I give it a month and I'll check back. A lot of folks salty in the comments about this protocol is because they probably bought YB at some expensive price. Stop buying shit at expensive prices. Jeez, everyone buys at the wrong price and then they complain about it like little pansies. I don't understand. Uh, they get the wrong information from the wrong people with the wrong mindset. What a tragedy how people manage money nowadays is what it is. Can't help everyone. Arrow, good afternoon. Much a pleasure, my friend. A late show emerges for the ride home. IF, yes, much a pleasure. I myself am at the end of my day. I'm looking forward to getting off and eating some dinner. Zero, Papo Activo, as active as I can be. Equities in a bull market now feels like people rotate capital there. Doesn't matter. It's not where I don't want to rotate to where capital is. I want to go to where capital is most understood by me because my obligation isn't to rotate capital and chase returns. My obligation is to manage capital in a way that is sustainable, that my mentality is comfortable with so I could go to sleep at night. And I know that hot bowl of liquid lava, liquid hot money is going to rotate exactly where I want it to at some point. So that's the way it works, my friend. Sergio, present and accounted for. Daniel, hi, Captain. How's your view of Fluid taking over market share, Curve, and stable swaps? It's irrelevant. Fluid has a very low interest rate, very low transaction fees. They're not taking over any market share because they don't have a stablecoin product. Curve's product isn't an exchange. Curve's product is a fully vertical, full, full stack, a vertically integrated stack of technology to support their stablecoin product. So most people don't really understand what Curve is. They think of it as an exchange. Um, And that's just short-sightedness and just the lack of technological evaluation of actually what's going on in these crypto markets. They view it through a relatively myopic lens, like, oh, comparing apples to oranges. That doesn't make any sense. Fluid is nothing like curve, and curve is nothing like fluid. So I don't really care much about people's takes in that regard. Um, so it's just not useful. No, I do not have exposure to Pendle. If I bought Pendle at 100x cheaper, that would be cool. Uh, with regard to cash flow, 20% is 20% is 20% is something I often say. Nothing I'm saying is against exposure to Pendle. I just can't buy it at 100x cheaper. Now I own a lot of stuff at significantly cheaper prices than I bought it. So if you could get a cheap price, like a 50% discount, 75% discount, there's a flash crash on Pendle, great. You get some exposure at the cheapest price possible. Otherwise, if it pays 20%, there's plenty of things that are paying 20%. For example, what's Aerodrome paying? Aerodrome is paying, if it wants to load, I don't know. I've been having SSL issues with Aerodrome, the autopilot. Why do I have this issue? I don't understand that. SSL protocol error. Then I go on VPN and it works, and I'm clearly not going to go on VPN while I'm streaming. But I think I want this to work. I was literally just discussing it for a reason. That's a shame. Okay, can't talk about something I can't show, but it's over 30%. Aerodrome's cranking out over 30%. So why don't chase? You know, Arrow just mentioned stock market's getting hot. I don't chase money. I deploy to and have deployed and am not deploying because I already have deployed the things that I know are productive. And Aerodrome's great, Pendle's great, but they all do the same thing. They all are producing a percent APR. So that's all that matters. Make sure you don't have overexposure. That's probably the most important thing I can recommend. You get 20% on one thing, 20% on another thing, and 20% on another thing, you're getting 20%. You just have too much diversification, most likely. Hannah, the Cirques, the Perpy Cirques, the Perpy Cirques, Perpy Cirques. Got some purple. This is the purple rectangle on Bitcoin price in dollar. No one cares. Oh, which one? I don't know. I mentioned that, I think, with taxes. I don't care. I don't care if that's what you're referring to. I listen. I'm handling my. I got to figure out my kid's school tuition, and I know there's a lot of troubles out there. People have their complexities. But I gotta take care of my family and my kids. I don't give a fuck about taxes. I don't care about other people's issues and problems. I gotta take care of my family first and foremost. It's not like I live necessarily extravagantly and I'm wasting money on frivolous things that could be best served helping other people. No, I literally have to pay for my kid's school. So that takes priority. So I'm sorry if I don't give a crap about someone else's problems. I have to take care of my family first. So I do not care. So I think this meme is ever relevant. So please stop sending me a tax bill, federal, state, and local authorities, unless I explicitly opt in. So I'm more than happy to opt into local services, trash, water treatment, I don't know, energy subsidies, anything that I personally use in my local region, my local area. Fuck, I don't need to pay taxes for roads. Literally every time I get on the road, I'm paying a toll, 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 toll. We're in Florida. We got sun pass everywhere. 50 cents, a dollar, dollar 50. It's everywhere. Toll, toll, toll. So no tax on roads down here. Um, what else am I paying tax on? You pay this property tax. DeSantis is trying to get rid of property tax. I don't know. Pay like 300 bucks a month for water treatment and trash. Or we're paying for that's not tax. That's a bill. So stop sending me fucking tax bills, people. You send me a bill and tell me what I'm paying for. Trying to take my money and shit. No more tax bills. Send me a bill. I'll tell you whether I want the service or not. Okay. Anyway, that's my opinion. I'm a little harsh. I've been, I've been less. No, I've always been very empathetic. Little less toxic empathy nowadays. Less. More, I got to take care of my family and not neglect them. Anyhow, Arrow, VLCVX, Burbs, not too much higher with yield based incentives. Yeah, it's just contributing. It's keeping things level and steady. What are you going to do? Listen, what have I told everyone over the last maybe 2 years, maybe 3 years since 2022? Almost more important than what you buy and own is managing the accounting and the tax treatment so the government doesn't bend you over for the money you somehow manage to make in these crypto markets or if you're investing in whatever you're investing in. So that was probably the most important thing folks spent their money on over the last couple of years, and especially spent their time on. It's optimizing accounting, optimizing whatever business structure you wanted to do, whether it's like an LLC, an S corp, or a trust, or what have you, whether it's a domestic U.S. entity or a foreign entity, and you did some sort of creative accounting structure. Shit. Otherwise, the government just takes everything from you. If you're in California or New York, you're giving 50% of every dollar you make to other people, and you didn't even get a bill. They didn't even tell you what they're spending it on. So I'm not okay with that. Oh, it's in your fiduciary obligation to optimize, and frankly, it's in your legal authority to optimize. And that's called tax avoidance rather than tax evasion. Tax avoidance is when you craft your accounting and structures according to the law to optimize accordingly. Evasion is when you have a tax bill and you don't pay a tax bill. But if you're telling the government, this is how I'm managing, and this is how I'm reporting, and this is why I'm reporting like this, these are the laws that I'm following, that is absolutely reasonable. And that is called avoidance. That's completely legal. Okay. So that's probably the most important thing to do over the last couple of years, in my frankly professional opinion. Um, that's about it on a Monday, October 27th. Let's go back to some charts. Bitcoin at 114. Listen, we're at the top of this very nice candle that pushed us back over the weekly 10. And I would put this week's candle thus far on a Monday as nothing interesting thus far. Do we push back below the weekly 10? First off, it's a relatively weak moving average. So I'm not hanging too much credibility on a push below it, a wick below it. I don't know. I really like that 108,343 line, which is a level. And I really like this perpy box. So Hannah, we've escalated from the perpy circuit to the perpy box here. And this is a significant region of confluence suggesting support or resistance flip support at this 108,343 level for 2025. We're not talking about for a week. We're not talking about the price action for 5 minutes on 5 minute candles. We're talking about for the year 2025 and then the day of our Lord or whatever you want to say the whole year. This is big data, a year of your life. And resistance just flips support for Bitcoin. It's very meaningful when you see technical data like this. And it's very meaningful when you see basically bearish engulfing or candles like this. That is an enormous, enormous monthly wick on gold. That is, if anything, that is a shooting star if I've ever seen one. 4 days left for the monthly close. If this closes at that level, you're talking about a 10% monthly wick. I mean, we'd have to go back to the 80s. You would have to go back to the 80s. That is a monumental candle. Um, you'd have to go back to the 80s, and there's a 15% wick. 16. Jeepers creepers. Jeepers creepers. Ever see that movie with beating you? Old classic horror movie. Jeepers creepers. Yeah, we're at about 9%, and back in the 80s, and look how long it in the 1980s when you had that 16% wick. It took how long to get back to where it was? Oh my God. Are we going to really do this? Date range from the wick is it took 10,164 days to get back to that top. Oh, just look how high we are. All right, ladies and gentlemen, see you in 2035 when gold does something like this. Oof, goodness. What an who bought gold at 2,500? That's crazy. Okay, let's wrap it up. But let's see if I got any lingering comments. If you're on X or on YouTube, please feel welcome to ask anything. More than happy to talk about it all. Evening, Cap. Much pleasure. Peter. Good morning. John, if you don't want to pay taxes, just borrow exactly your weekly VE Aero bribe. Yeah, that's 40 acres. Now you have risk exposure on your principal. I don't borrow. Um, and there's other ways to manage liabilities, tax liabilities. There's other crafty structures, but obviously credit against principal works. So that works. If you have $1 million worth of Bitcoin, you could borrow 3% a year, 5% a year. So if you have $10 million, you could borrow $1 million a year. You could borrow 10%. What's the odds of a 90% crash in Bitcoin? There's your risk. So I probably wouldn't take that risk. I'd probably do 5%. So if you had $10 million worth of Bitcoin, you borrow $500,000 a year. Um, I don't like credit. I can't sleep with credit. Now that obviously works if you're got mega millions or a billionaire. That works for plenty of people. Um, or if you're just borrowing a little bit, but if you want to have a livelihood, like 50 grand, 100 grand, 200 grand, depending on what state you're in the U.S., you need a lot more principal to be able to borrow and avoid paying taxes that way. But that works. That certainly works. Um, well, minimal smart contract risk, but yeah, but when you pay back the loan, close that position at 8 p.m. for minimal smart contract risk. If you close that position, you're either paying back the debt, where do you get the money to pay back the debt? Okay. Or if you're closing that position and they're selling a part of your collateral, that's a forced sell, so it's a sale. You gotta pay on that anyway. So you gotta watch the subtleties in that transaction. The only way there's no can't get away with not paying taxes. Taxes are always due. The only thing in life that's guaranteed is death and taxes. Let me explain something very simple about optimizing and tax avoidance. You're never going to get away with not paying the tax. All you could do is manage when the taxes are paid and by who. Okay? So the biggest thing in tax avoidance isn't really avoidance, it's deferral. And that's really, look, a Roth IRA and an IRA, even a 401k, that's really a tax deferral program, which is tax avoidance. Are you paying tax at the end of the year? No. You're avoiding the tax and you're deferring it to a later date. So that's more or less the structure that I've optimized for my own personal needs is a tax deferral structure. And that is something that I saw as advantageous, and it took a lot of work. Was it worth it? Better than a damn Roth IRA. Is it significantly more complicated? It's infinitely more complicated. I actually had to learn law. I might as well have gone to law school with the amount of work I put in, and I could have never done it without AI. Um, I don't know how else could I describe it. Folks ask me on Discord about it, and it's hard for me to describe the extent of what I've done because we got 4 or 5 memorandums at this point that break down the law, and then I have my operating procedures, and my operating procedures are kind of an extension of the trust instrument that describe every single scenario of what can play out. So it really takes discretion out of the equation. Discretion is what I argue in my tax liability memorandum is a critical component of dominion. If you have discretion, a capacity to make choices, then you truly have dominion over capital. And dominion is the critical test for what is income, complete dominion, and having realized, which is past tense. So that is really the crux of a lot of what I discuss, because property, in order to become money, needs to be realized. You realize property by selling it into dollars, which is currency. And so there's different types of there's different types of money, there's different types of currency, and there's different states for all of these, because you could have prefixes, um, like realized. What is realized money versus unrealized money? What is realized property and unrealized property? So literally, my documents have definitions of all this stuff. Very important. Very important. Um, anyway, my point is, and in conclusion, you never get away with not paying tax, but you could defer it. You could push it into the future, and you could transfer it to someone else. Like uh, you can't, for instance, avoiding double taxation. If you accumulate untaxed property and then you distribute it as like trustee to a beneficiary, you're passing the tax liability to them, and they're going to pay it on their 1040. Now, obviously, if you have an entity that's like trust that's doing business and it's accumulating income and you're treating it as income and you're paying tax on that income, it's tax money. So you're not going to pay income tax at the trust level and then at the beneficiary level, that'd be double taxation on the same money. So I prefer the idea of deferring that taxation to beneficiary distribution, which requires a variety of a song and a dance, should I say, in in interpreting the laws as written by Congress. Fortunately, it's not a moving target. Fortunately, these laws are ancient, prehistoric even, and they're not. It's not even the laws as written by Congress. It's also common laws written by judges and rulings. So it's a very fixed target, dating back 100 years or more in some of these cases. So it's not like you have to really jump through moving hoops. These are hoops that are pretty much set in stone. Anyhow, hope that helps. Complicated topic. No, I do not. I have little to no investing left to do in this market right now. Um, everything that I want to own, I do own. Um, I wouldn't. I wouldn't. What's Could I buy it at a $1 million market cap? Of course not. The guy's running around at a raised $1 billion. Of course, I'm not going to buy it. And look at what yield basis sold at. Absolutely not. I will accumulate under reasonable conditions. For instance, what's given to me in boat rentals. I'm not going to spend money on it. I need my money for my kids at school tuition. So absolutely not. Certainly not spending money on something that's a multi-billion-dollar valuation right out the gate. How much is it paying? It's probably going to be paying 20%. Guess what else is paying 20%? Damn near everything else. 20% is 20% is 20%. My 2 cents. Equities regain market share until end of year. Top Q1, it seems. Maybe time for more compounding. Yeah, I got enough cash for a bit, and that's exactly why I'm saying just compound some yield basis from boat rentals and call it a day. Not much else I'm thinking about. People scared it's over. Kind of feels like it's just starting with the blow up top in gold. Of course, we'll see how the month close. People scared is the biggest noise ever. You should never be scared. You should never be exuberant. You should be prepared and have a plan. There's no room for fear and there's no room for greed. If you feel any of those things, know that you feel You should not feel that way. And if you feel that way, you need to be better. You can do better. Okay? Your goal is to neither feel greed, nor fear, nor exuberance, nor nothing. This is an equation. This is a process that is mechanical. Own more assets over time. Rule number one. Rule number two, don't buy assets at a premium. Know when to stop buying assets. You buy assets when they're cheap. Rule number three, the fuck you pay me. Better buy assets that pay you. Otherwise, you're just buying shit that someone else is going to sell the second it goes up in price. Hope that helps. Even though a trust is more complicated than a Roth IRA, the full control factor makes me feel more secure and comfortable. Now, the fun thing is it's not control. Control implies discretion. Discretion implies dominion. So when you're talking about control is really a capacity to craft the rules, procedures, policies, and the what to do's. And the more you get granular with the rules, procedures, and policies, the less discretion the trustee has. The less discretion the trustee has, the less dominion the trust has, and the stronger the position the trust is in to say it's unrealized property because it's not income. Income requires realization and dominion. That's the Glenshaw Glass case. That is the condition for income. Realization, clearly realized with dominion. Okay? Here, we'll look that up real quick. Glenshaw Glass. Boom, right at the top. Ba-ba. Yep. Let's see. Here we have instances of undeniable accessions of wealth. So accessions of wealth. An accession of wealth requires clear realization, clearly realized, and over which the taxpayers have complete dominion. Dominion, complete. So it's these words matter so much. Realize, past tense. If you get property, is it realized? Can you put that on a debit card? No, you have to realize the property to put it on a debit card in order to spend it. Okay, realize, past tense. Number one. Two, complete dominion. It's not just dominion, complete dominion. It's like you are the commander, the totalitarian dictator, complete dominion. You are in complete control. Nobody can tell you anything. You could do whatever you want. Complete dominion. That's a big deal. This is probably one of the such an incredible linchpin sentence dating back to 1955 about what constitutes income. Okay. And then obviously you got to interlace this with Eisner v. Macomber. That has to do with capital gains. So I don't deal with capital gains because I literally avoid capital gains because I can't stand the accounting for capital gains. So I literally just hate that concept of capital gains with a passion. Uh, and the laws are old school, harder to break, harder to change. Yeah, this thing dates back to 1955. This is the linchpin for what is income. And I absolutely love this sentence from this case. Ladies and gentlemen, thank you for joining me on a Monday, October 27th, 5:32 p.m. 250 people made it to the end of the stream today, and you are all now that much more rational because of it. Stay calm, cool, and collected during the week. Try and neither be exuberant, nor fearful, nor greedy, nor anything in between. Try and have a plan. Be smarter. All you have to do is be smarter than 51% of the people, and you shall succeed. Make good decisions, follow the rules. Rule number one, two, three, and everything will be okay. I will see you guys and gals later towards the end of the week. Until then,